We are back here in our MCQ Marathon playlist where we crack the audit code with questions for board exam preparation. And we are now in round four, and this is part two. We have answered the first 25 questions in part one. So if you haven't yet viewed that, you may want to pay that video a visit. But if you're done with it, then let's go right ahead and answer question number 26. The permanent file section of the working papers that is kept for each audit client most likely contains, and here we take a quick review of the two types of working papers that we have. We do have the permanent file, which contains files of continuing importance, and we have the current file, which will contain information, of course, for the current year audit. What we are asked here is which of the four will be included in the permanent file. Letter A talks about the narrative descriptions of the client's internal control policies and procedures. Now, we are reminded that we are required to obtain an understanding of the client's internal controls, and we are required to document that understanding. Because we do not expect the internal control systems to change year after year, then this documentation will form part of the permanent section. So most likely letter A will be the answer to this. Still, let's look at letter B. Review notes pertaining to questions and comments regarding the audit work performed refers to the current year's work. So this will be in the current file. Correspondence with the client's legal counsel concerning pending litigation is also relevant only for the current period under audit. So this will be current file. A schedule of time spent on each engagement is also part of the current file. So letter A is the answer to number 26. 27. Which of the following statements is not true regarding the competence of audit evidence? Do take note that we are looking for the incorrect statement. We're looking for the statement that is not true. Let's try to very quickly highlight that one so as to not get lost. Okay, letter A, to be competent, evidence must be both valid and relevant. That is true. Relevance is enhanced by an effective information system. It may sound true, but actually that is not true. It is not relevance that is enhanced by effective internal controls or information system. Rather, what is enhanced is reliability and not relevance, right? So bravo is the answer to 27. Letter C is true. Relevance is always tied to audit objectives. You will know that something is relevant if it helps you meet your objectives. And letter D, validity is related to the quality of the information. So bravo is the incorrect statement for number 27 because it is reliability that is enhanced. Number 28, which of the following statements is not true? So again, we are looking for the incorrect statement, not true. The evidence gathering technique of observation, letter A, is limited to what the auditor sees. Letter B is useful to most parts of the audit. Letter C requires the gathering of corroborative evidence, or letter D is rarely sufficient by itself. Now, when we talk about the evidence gathering technique of observation, it is a common procedure performed in an audit, but it does have its limitations in that number one, it is limited to what you see, and number two, it is only limited for that particular point in time in which you have observed it. So alpha for number 28. 29. Which of the following audit procedures is most likely to detect a cash balance that is restricted as to withdrawal? Letter A, prepare an interbank transfer schedule. Letter B, review the cutoff bank statement. Letter C, compare cash balance with the cash budget. Or letter D, make inquiries of management. So the correct answer to this one is letter D, you inquire of management. Okay, so delta. Number 30. Which of the following statements concerning litigation claims and assessments which were extracted from a letter from a client's lawyer is most likely to cause the auditor to request clarification? So if you can imagine, you have already received the reply of your letter of audit inquiry sent to the client's lawyer. So the lawyer mentioned letter A, I believe that the plaintiff's case against the company is without merit. Letter B, I believe that the possible liability is nominal in amount. Letter C, I believe that the action can be settled for less than the damages claimed. Or letter D, I believe that the company will be able to defend this action successfully. So of the four statements, which one would you most likely require clarification? And the answer to this one is letter C, because definitely we would want to know, right, how much less than the damages claimed. So letter C for number 30. Number 31, which of the following statements is not true? So again, we are looking for the incorrect statement. Which statement is not true? The evidence gathering technique of inquiry, letter A, requires the gathering of corroborative evidence. Letter B, cannot be regarded as conclusive. Letter C, does not provide evidence from an independent source. Or letter D, is the auditor's principal method of evaluating the client's internal control structure. And the incorrect statement here is letter D. When you talk about evaluating the internal control structure, then you would be using test of controls. Okay, and there are other procedures that could more effectively help you evaluate the internal control structure than simply inquiry. So that makes letter A a true statement. When you inquire, it cannot by itself be considered sufficient and appropriate, so you do have to gather corroborative evidence. Inquiry cannot be recorded as conclusive, actually, similar with all audit procedures, right? I mean, all audit evidence that we gather from the procedures. They are persuasive, they are not conclusive. So, letter B is also true. It does not provide evidence from independent sources, is also true, because when you talk about inquiry, you're talking about inquiring from members of management or the employees. You're basically inquiring from your client. If you inquire from independent sources, such as, for example, banks, customers, suppliers, then that is confirmation and not simply inquiry. Okay, so delta for 31. 32. Which of the following most likely would be an advantage of using classical variable sampling rather than probability proportional to size sampling? Now, be reminded that when we talk about PPS or probability proportional to size, they may be called value weighted selection or peso unit sampling or dollar unit sampling. The main idea being that the larger the value or the balance or the size, the bigger is the chance of it being selected. We are looking for the advantage of using classical variable sampling rather than PPS. So, letter A, the auditor rarely needs the assistance of a computer program to design an efficient sample. Letter B, any amount that is individually significant is automatically identified and selected. Letter C, inclusion of zero and negative balances generally does not require special design considerations. Or letter D, an estimate of the standard deviation is not required. So in the case of, we're looking for the advantage of the classical variable sampling. In the case of letter A, this does not necessarily we can't necessarily call this one as an advantage of classical variable sampling, as it may still require the assistance of computer programs, especially when you're performing statistical sampling. Letter B is also not the answer because letter B would have been an advantage of PPS. Okay, what we are looking for here is the advantage of classical variable sampling. So the correct answer here actually is letter C, because in probability proportional to size sampling, if the balance is zero or negative, then it will definitely not be part of your sample size. You would need to make a special consideration of that. That is not a problem with classical variables. So classical variables would not require special considerations for zero and negative balances. They have an equal chance of being selected to be part of your sample. So Charlie for 32. 33. During an audit of the accounts receivable function, you found out that accounts receivable turnover rate had fallen from 7.3 to 4.3, meaning to say there was a decrease or a decline in the AR turnover rate. What is the most likely cause of the decrease in the turnover rate? This simply means that it seems like the company is taking a longer period of time to collect its receivables. Our choices are a more liberal credit policy. Perhaps they have already set lower standards for people that they will be extending credit to, and this might have led to credit customers that are either not that liquid to pay or do not have a good credit standing, and thus taking the longer time to settle their accounts. Letter B, an increase in the discount offered for early payment. If there was an increase in the discount for early payment, then we would expect AR turnover to have increased, right? Because people would want to avail of the discount. Greater cash sales would not have any effect on this. Change from net 30 to net 25, we would also expect an increase in our AR turnover rather than a decrease. But then more likely in the case of the change from net 30 to net 25, we would be looking at changes as well in the number of days sales, right? So in this case, the correct answer would be letter A. The company must have taken a more liberal credit policy. They must have decreased the standards that they have required in order to extend the credit sale, and this has decreased the collection rate, okay, of the company. So that's alpha for 33. 34, which of the following statements about the failure of the auditor of detecting material misstatements is always true? So again, we're looking for the always true. Letter A, the auditor has the burden of defending the quality of his audit. Letter B, such a failure is an indication of the absence of your professional competence and due care. Letter C, you did not comply with the PSAs. Or letter D, your failure to discover material misstatements is an evidence of inadequate planning, performance, or judgment. Okay, so the always true statement here is letter A. You have the burden of defending the quality of your audit, of course. When we talk about failure to detect material misstatements, we are reminded that the level of assurance we are able to provide is only reasonable, not absolute. Therefore, even if you are competent, okay, even if you have exercised due care, even if you follow the Philippine standards on auditing, and even when you have properly planned, and performed the engagement or exercised the right level of judgment, it is still possible for material misstatements to remain undetected. So the correct statement here is letter A. 35. Which of the following is most likely to be a response to the auditor's assessment that the risk of material misstatement due to fraud for the existence of inventory is high? So we're looking for the situation that would most likely activate our spider senses that there is a high risk of fraud. There is a high fraud risk, okay, for inventory. Letter A, request that inventories be counted prior to year end. Oh, I'm sorry. We're going to evaluate which of the four is an appropriate response, okay, when there is a high fraud risk for inventory. Letter A, request that inventories be counted prior to year end. That means we're basically doing an interim count, and we know that if the auditor chooses interim testing, the auditor is more relaxed. And a more relaxed response is not a valid response if you think there is a high risk of fraud. So it should not be letter A. Perform analytical procedures rather than taking test counts. And we are reminded testing or analytical substantive analytical procedures or analytical procedures done in testing is actually considered to be less effective. That's why they are simply optional. Okay, and because of that, the auditor here is becoming more relaxed rather than strict, right? So it's not letter B as well. Request that inventory counts at the various locations be counted on different dates so as to allow the same auditor to be present at every count. So you would want to personally observe all of the counts yourselves, which is a noble endeavor by itself. But then you do get to realize that if you schedule it on different dates, then the custodians of the various locations might inform the other custodians that the auditor is on the way. And so this will boomerang, this will backfire, this plan will backfire on you. So it's not letter C, as well as you are providing them the time to inform the others that you would be coming. So the correct answer here then is letter D, observe the task counts on an unannounced basis. Do take note, this is different from the annual physical count observation that we do. Okay, so part of our audit procedures would be to observe the annual physical count of the client. Now, in the case of the annual physical count of the client, we do have to coordinate with the client as to the timing because basically the count will be done by the client and the auditor will simply observe. This is different because this one is an example of a surprise count which is being done by the auditor as a response to a high fraud risk over inventory. So again, this is a totally different count from the annual physical count. This one we can do or we should do on a surprise basis because again, we have a high fraud risk for inventory. So delta for 35. 36. Which of the following is not a true statement? In the opinion paragraph of the standard unqualified report, the auditor is required to state letter A, whether management has or has not made adequate disclosure. Letter B, that the financial statements are presented fairly. Letter C, an opinion about the financial statements taken as a whole. And letter D, a conclusion about whether the company follows the Philippine financial reporting standards. So we are looking for the statement that is not true. Where is my highlighter? There it is. Not a true statement. So if you would recall, the opinion paragraph or the opinion section actually is made up of two distinct parts, right? The first one is the introductory part, and the second one is the actual opinion. Neither of the two includes a reference to whether management has or has not made adequate disclosure. What is being referred to there is that you have audited the financial statements, the name of the client, And then, of course, the periods covered, make a reference to the individual financial statements, including the notes to the financial statements, and then make a reference as well to, and then give your opinion, right? And whether the FS is presented in accordance with PFRS. So we do not state whether management has or has not made adequate disclosure. So alpha for 36. 37, which of the following circumstances would most likely cause an auditor to suspect that material fraud exists in a client's financial statements? Again, we're looking for the one that will make you suspect the presence of fraud. Letter A, property and equipment items are usually sold at a loss before being fully depreciated. Letter B, monthly bank reconciliations usually include several in transit items. Letter C, significantly fewer responses to positive confirmation requests are received than what is expected. Or letter D, clerical errors are listed on the CBIS generated exception report. So to this, we could already remove letter D, as letter D specifically mentions clerical errors, and what we are looking for is a possible instance of fraud. So we could take out letter D or delta. We can also already remove letter B, bravo, because the presence of in-transit items can be considered as a usual or is a usual part of the company's transactions and bank reconciliation. It does not necessarily indicate the presence of fraud. So that's Bravo and Delta out of the way. We could also already remove letter A, as if property and equipment are usually sold at a loss before being fully depreciated, this might signal, other than the fact that this may be a common occurrence depending on the marketability of these equipment, but this might signal more of an issue on the estimates made, which may be errors, not necessarily fraud. Okay, so letter C is the answer. We remember, in a positive confirmation, we request the customers to reply whether they agree or not. So when you receive significantly fewer responses, this will raise the question of whether these customers actually exist. Perhaps the reason why they are not responding is because they are ghost customers after all. So Charlie for 37. 38. Audit risk consists of inherent risk, control risk, and detection risk. Which of the following statements is true? So we are looking for the true statement. Letter A, detection risk is a function of the efficiency of an auditing procedure, and that is not true. Detection risk is a function of its effectiveness, not its efficiency. Letter B, the risk that material misstatement will not be prevented or detected on a timely basis by internal controls can be reduced to zero by effective controls, and this is also not true. Internal controls can only provide reasonable assurance, not absolute. Letter C, cash is more susceptible to theft than an inventory of coal because it has greater inherent risk, and letter C is actually true. Letter D, the existing levels of inherent risk, control risk, and detection risk can be changed at the discretion of the auditor is not true, because we know inherent risk and control risk are non-controllable by the auditor. So Charlie for 38. 39, you usually examine receiving reports. So when we talk about receiving reports, think about inflows of items, okay? Receipt of inventory. And when do we receive inventory? It is when we purchase them, right? That is the general transaction that leads to a receipt of inventory. And we also receive inventories when they are returned to us. So in the case of sales returns. So when we evaluate the choices, it cannot be Bravo, Charlie, nor Delta, because Bravo, Charlie, and Delta all talk about the sales journal. Okay, sales journal would mean an exit of inventory, not the receipt of inventory. This leaves our answer to letter A, voucher register, representing requests for payments of items purchased, and sales returns journal. So alpha for 39. Moving forward to number 40, when the auditor performs tests of controls regarding the policy of counting materials received from the suppliers, you would most likely. So we remember, for TOC, we can perform the big three: IIO, inquire, inspect, observe, and re-performance, of course. Letter A says inquire with the receiving clerk of whether a count is being made. Letter B, verify that cash vouchers are accompanied by receiving reports. Letter C, you can inspect the receiving reports. Letter D, observe several times as the receiving section is receiving the incoming deliveries. So to the four, we could already remove letter B, because basically the concern of letter B is whether the cash vouchers are accompanied by receiving reports. It is not highlighted here the actual counting of the materials, okay? But whether the request for payment is accompanied by or supported by receiving reports. So we could take out letter B. A, C, and D all belong in the IIO, inquire, inspect, observe. We have to choose the best one. Okay, between simply inquiring with the receiving clerk or inspecting the receiving reports or observing the actual counting, then I think you will agree with me that the best procedure, the most effective procedure for you to determine whether they actually counted the materials is for you to observe several times as they are receiving the incoming deliveries, right? So while letter A and letter C may also be valid procedures, but it is letter D that provides you the most effective, or that proves to be the most effective procedure. So delta for 40. 41. The auditors of White Stained Sheets Inc. are unable to obtain evidence regarding accounts receivable, which is a material balance. Instead, the auditors are able to satisfy themselves with other alternative procedures, okay, relating to White Stained Sheets audit. Which report will you most likely issue in this situation? So again, take note, they were not able to obtain evidence regarding accounts receivable and AR is material. However, they are able to satisfy themselves using other alternative procedures. So in this case, the question is there a scope limitation? The answer is no, because they were able to overcome it with alternative procedures. And so the auditor most likely can still issue an unqualified opinion in this case. So Charlie for 41. 42. When are the ratio estimation and difference estimation techniques most likely to be preferred over the mean per unit estimation method? This one brings us back to audit sampling and particularly substantive testing. And we are reminded that in the case of ratio estimation technique, we will use it if the misstatements are more related to the book values, okay, because we'll be using the ratio of the misstatement to the book value, and difference estimation if the misstatements are more related to the units. So we're going to compute the misstatement per unit, right? Mean per unit estimation, on the other hand, is not so focused on the misstatement as it is more focused on the audited value. And so, therefore, you could even use mean per unit estimation even when there is no book value available. Okay, so when are you most likely to use ratio estimation and difference estimation? The answer here is when the differences are frequent. This will make the use of ratio and difference estimation more efficient. Okay, so bravo in the case of number 42. It can't be when the differences are estimated to be small or when they are infrequent, okay? Because we are going to make use of ratio and difference estimation in two conditions. Number one, when a book value and an audited value is available. And number two, when the estimated or expected differences or when the differences are expected to be frequent. So bravo for 42. 43. Which of the following internal control procedures most likely would deter lapping of collections from receivables? So, lapping would, of course, refer to the misapplication of the collections, right? We're looking for one that will deter, discourage lapping of collections. Letter A, independent internal verification of dates of entry in the cash receipts journal with the dates of the daily cash summaries. Letter B, segregation of duties between the person receiving cash and the one posting the collections. Letter C, supervisor's comparison of the daily cash summary with the sum of the cash receipts journal entries. Letter D, authorization of write-offs by a supervisor who is independent of the credit approval. Now notice in the case of Alpha and Charlie, these both refer to records. It's basically just verifying one record versus the other. These two wouldn't be too effective in preventing lapping. In the case of letter D, you would also notice that the concern is more on the write-offs, while letter D may be a valid control activity or control procedure against write-offs. This will not directly address the problem of lapping. So the correct answer to this one is bravo. There should be a segregation of duties between the one handling the cash or receiving the cash and the one recording or posting the collections. So bravo for 43. 44. In the confirmation of accounts receivable, the auditor would most likely, letter A, seek to obtain positive confirmations for at least 50% of the total amount of the receivables. I have to tell you, no such guideline exists. Okay, so it's not letter A. Letter B, require that confirmation requests be sent a month before year end, but confirmation requests are tests of balances. And when we talk about balances, then it would be most effective if the amounts we are confirming will be as of balance sheet date. So it's not letter B. Require confirmation of all receivables from government agencies, and this is also not true. Again, we do abide by our responses to testing, and this would depend on the characteristic of this population as well as the risk involved in it. So it is still possible to have sampling even for government agency accounts. Letter D, request confirmation of a sample of the inactive accounts is the correct answer. As while mainly being a test for existence, we would also like to know the presence, no, or the existence of these accounts, even if they are inactive. So delta for 44. 45, an operational auditor. So think about management auditor, operational auditor, internal auditor is most likely to be concerned with whether a transaction was reasonable, properly supported with documentation, properly approved, or necessary. So the correct answer to this one, if you're an operational auditor, you do take a look at both efficiency and effectiveness. So therefore, we would be looking at whether this is necessary. Okay, so delta for 45. 46, we talk about unrecorded liabilities, and they are most likely to be found during the review of which of the following documents? Will it be unpaid bills, bills of lading, unmatched sales invoices, or shipping records? Notice bills of lading would refer to shipping documents as well. Unmatched sales invoices would refer to sales, and shipping records would also refer to sales. So Bravo, Charlie, and Delta all refer to sales. Okay, unrecorded liabilities is the concern, so the answer should be Alpha, unpaid bills. 47. In evaluating the effectiveness of a company's credit and collection policies, the ratio most likely to be used by the auditor is, and do take note, we're talking about credit and collection. This is directly related to our receivables, so therefore it's the AR turnover ratio. So bravo for 47. 48. Which of the following statements is true? So we're looking for the true statement. When the CPA has been engaged to do an attestation engagement. Letter A, the CPA firm is engaged and paid by the client, therefore the firm has a primary responsibility to be an advocate for the client. That is not true, right? So even when we are engaged and paid for by the client, our responsibility will be to the users in general and not to the client in particular. Letter B, as long as CPA firms are competent, it is not required that they remain unbiased, and also not true. We are reminded that in the case of assurance engagements, independence is a requirement. Letter C, should a situation arise where there is no convincing authoritative standard available and there is a choice of actions which could impact the client's financial statements either positively or negatively, you are free to endorse the choice which is in the client's best interest, also not true. Again, we are reminded that our allegiance, if you may call it, is to the public or the expected users of the information and not to the client. This is one of the main reasons why we are required to be independent, so not letter C. Letter D, the CPA firm is engaged and paid by the client, but the primary beneficiaries are the statement users. This is, of course, the true statement. So delta for 48. 49. Which of the following statements is or are true regarding independence and objectivity as applied to internal auditing? Number one, independence is a departmental feature that affects the scope of audits. Number two, only the audit committee can determine independence. Number three, objectivity is a personal feature that is to be exhibited by all internal audit team members on an audit. And for these three statements, only two statements are correct. That's statement 1 and statement 3. So bravo for number 49. We now go to question number 50 with respect to the auditor's planning of year-end examination. Which of the following statements is always true? And actually, I think we have answered a similar question. This must be a repeat question. If you would remember, the always true statement here is that it's an acceptable practice to perform interim testing, right? So we have completed our first 50 questions, the first 25 in part 1 and the second 25 in part 2. That means effectively we have already ticked off one third of our 150 item set for round 4. So if you're still up for the challenge, I will hope to see all of you in round 4, part 3. That will be in our next video.